please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
It's a third of a percent higher, 41 higher, so that's 10,727.
In the financial year 18-19, we have set a target of 652 million tons of coal production.
Future retail will get a gain of around 475 crores, and some gain goes into FEL because that was a demerged entity.
We are expecting next 24 to 48 hours over Mumbai.
The stock got added to the ASM list just earlier this month, and that was the reason the stock was seeing lower circuit of 5%.
The market is up 127, 130 odd points, and it's been super strong since, the word go.
AG has moved a special leave petition in Supreme Court on this matter. So unless the AG's opinion comes in, the sugar tax issue, is not going to go forward.
Where was strength? It was in real estate. You look at metals, you look at IT. Those are the three areas. If you want to divide the Nifty stocks, real estate, metals and IT, that's where most of the strength was. Second day of gains on Dalal Street. The Nifty crosses 10,800 intraday, while Sensex rallies close to 300 points. Financials, energy and IT stocks are the top performers. Mid-caps and small caps extend yesterday's rally, end the day in the green.
A day after the repo rate hike, the 10-year bond yield hits a 2.5-year high, touches 7.96%. Experts say 8% could well be on the horizon.
IDBI and Federal Bank put fresh conditions to sell stake in their life insurance joint venture business worth 6,000 crore rupees. Aditya Birla Life and Max Life slug it out after IDBI and Federal Bank seek a premium for the bank assurance partnership. That is a CNBC TV18 exclusive.
Azim Premji's investment company picks up a 6% stake in Future Retail for 600 crores. Future Retail's Kishore Biani confirms the deal and says the funds will be used to pay debt.
The Met Department forecasts active to vigorous monsoon conditions along the west coast. Extremely heavy rainfall forecast for Mumbai till Monday. Okay, those were the top 5 headlines from the day's trading action. Hello and welcome to a fresh new edition of Markets Today Talk Back, the show where we tell you all about 8 hours of market trading in just 5 headlines. I'm Prashant Nair. With me is my colleague Ekta Batra. Ekta, hi.
Hi Prashant. Well, over the next 30 minutes, we will be discussing the top 5 market headlines and our experts will be answering your stock queries. Joining us now to answer all of your stock queries is Angel Broking's Mayuresh Joshi on the fundamentals and technical expert Mitesh Thakkar. Thanks, gentlemen, for joining in this evening. But before we get discussing about the markets, Prashant, it was a good pullback and we came off the day's high, but nonetheless 10,800 plus.
Oh, absolutely. Just to sort of rewind the clock back to the morning when we started trade, the global backdrop was already quite positive. Stocks were higher, oil was down, dollar was broadly lower. So the global backdrop was very good to begin with. Some would say that the good global backdrop has not mattered when the markets were in pain. So why should it matter now that the market is rebounding? It's just a function of having overextended itself on the downside. So it's just bouncing. But nevertheless, for what it's worth, when we came and we started in the morning, it was pretty good as far as the globe goes. And by the way, through the course of the day, Asia picked up, the rest of the Asian peer markets all sort of traded in the green, and most of them ended in the green higher as well. The bounce in the Nifty and the mid-cap index started early, continued, built on it through the course of the day. And we were up pretty strongly, I think about 130 odd points, at the day's high on the Nifty. But we gave up a little bit of those gains. On the Nifty, we gave up 50 points from the day's high, which is actually substantial. If you look at the total quantum of the gains. But the mid-cap index also gave up some gains, some 40 odd points. The small-cap index, also came off marginally. But the mid-cap and the small caps still managed lesser losses from the day high as compared to the Nifty. So, it's making up for what it lost over the last couple of weeks or so. As the headlines alluded to, real estate, IT, financials, metal stocks were some of the leaders, both, large cap and mid cap in each of these sectors. And mind you, unlike late last week, as we wrap up this week, there's one more day of trading left. In terms of events, both locally and globally, economic data which could move markets here or there, it's actually a pretty light calendar. But in terms of stocks, Ekta, what moved?
Well, a lot of the Tata stocks were in focus today. So Tata Motors gained quite significantly. One of the top gainers on the Nifty. Tata Steel also rallied today. And besides that, there was something like an ICICI Bank which saw some amount of buying. So up 2.5% for that one. Indiabulls Housing Finance, which was a bit sluggish yesterday, saw some amount of buying today. So that stock managed to gain. Asian Paints and Reliance Industries were also in the green, aiding the Nifty. Overall, on the downside, there was Titan, which was down 1.4%. Eicher Motors, Indocin, all of these stocks closing in the red. From the broader markets, it was quite a field day for some stocks. So IDBI Bank, for example, was higher today, up around 6.5%. IDFC saw follow-on buying from yesterday, and even Federal Bank, which was up 3.5%. But on the downside, a couple of these usual suspects continued to decline. So Manpasand was down another 5%. Quality lost around 5% and Bhushan Steel at around 36.5 rupees was down 5%.
Okay, so with that wrap up, let's quickly find out what what our market guests make of what we saw in terms of trading action. Mitesh, I mean, why don't you set it up for us? Your view of the drop we saw from the day high on the Nifty, would you make anything of it? And the general strength we saw in the broader markets?
You know, I think, Green, the drop, I think, more than the Nifty, I think, affected the Bank Nifty. And last 2 days, we've seen Bank Nifty slightly underperform. I think yesterday also the Bank Nifty was up less than 0.25%, while the Nifty did well. And today, while the Bank Nifty started well, towards the end, it kind of tapered off and closed with hardly 0.5% gain. And that also in turn pulled the Nifty down. I think what is important is that the Bank Nifty starts getting past 26,700 again. If that doesn't happen, then there could be a slight profit booking kind of a pattern forming on the charts, and we could retest the recent lows of 26,200 to about 26,100, below which further correction could open up. So that's my only worry. Otherwise, the Nifty and the broader charts still look good to me. What is good is that the breadth has kind of picked up. This was last 2 days have been much better in terms of the overall movement of the markets, barring the Bank Nifty. I think, you know, if you look at IT stocks, if you look at mid-cap stocks, even Reliance and other infra stocks are doing very well. So in that sense, I think the Nifty does look slightly safe to me, and I think with some choppiness, we'll head towards the 10,900, 930 zones again. But it's the Bank Nifty which is the only cause of worry, and I'll keep a close eye there.
Okay. Mayuresh, what about you? What do you think about this mid-cap pullback that we've seen?
Good evening, Ekta. I think the carnage that we probably saw in the broader universe, specifically small and mid-cap stocks, and again, all the concerns related to auditors resigning, you probably had the ASM margin probably play out into these stocks as well. But I think qualitative mid-caps, irrespective which have corrected and where the earnings momentum looks extremely strong, I think that landscape probably holds good. Now, the run-up that we've probably seen within the broader universe, the earnings multiple had run ahead in terms of where the earnings projectiles were kept on. So a large element in terms of the derating in terms of forward ratios with the correction gives meaningful opportunity. So I think qualitative mid-cap and large-cap names is something that we'll still continue to prefer in a staggered way.
Fair enough. That sets us up for the next headline, the second story of the day. A day after the Reserve Bank of India hiked the repo rate by 25 basis points, the 10-year benchmark bond yield sprinted to 7.96%, a near 2.5-year high. Meanwhile, experts also say that the yield may soon get close to about 8% or so. Lata is here to tell us more what drove this and whether we're actually going to go to that 8%. Lata, over to you.
Yes, the day after the bond markets are seeing all the red there is in the policy. In the first place, the policy could be neutral in its stance, but it's still hiked. And in a global environment where the Fed is expected to hike 2 or 3 times, I don't think any bond market is safe. Everyone has to fall in step, and therefore you know that it's only a matter of time before that stance changes and there is withdrawal of accommodation as a stance, along with more rate hikes. Second, the sheer liquidity. In the first place, the Reserve Bank refused to give any assurance or explanation on whether they will do any open market operations and why they will do it. That's another sore point for the market. And then the rules itself, when you tweak the LCR rules, the liquidity coverage ratio rule, basically you're telling some of the banks your existing G-Secs will qualify for liquidity. So they will not buy additional G-Secs as well. Demand for G-Secs goes down a little bit less. Then there are the state bonds. What did the RBI say yesterday? Until now, state bonds were regularly being valued 25 basis over the Government of India securities. Now, that's not always correct because some states are good and some states are bad. So now they will be valued according to their market acceptance. That means all the state loans are going to have higher yields. They won't get that support which they had so far from the rules. Now, if state loan yields go higher, then people are attracted there and not attracted to government securities. To that extent, government security yields also will have to play catch up. And then, of course, the government is widely expected to borrow more. Anyway, the borrowing calendar is skewed towards the second half this year, which is a very bad thing to do. And over and above that, in an election year, you can't at least borrow less. You can't cancel auctions. So all these is, going to build a case that there is really very little reason to buy bonds. They are going to get cheaper the next day after you buy them. And so the continued buyer's strike, the PSU banks not wanting to buy. I mean, why are they not wanting to buy? Because they are seeing losses in those bonds. That attitude is getting reinforced. Now, let me just put one positive that came from the market. The one-year CD has become a little better. It's trading better. So over there, there is a bit of a relief, but that is a relief for a very small pocket of the market. For the rest of the market, you are going to see bond yields going to 8%.
Okay, all right, Lata. Thanks very much for that. But let's get in a query now. Rajesh has sent us a question on L&T Financial Holdings, 300 shares of the company bought at 200 rupees. He's been holding the stock for 10 months now and wants to know if he should hold or sell. So 300 units bought at 200 rupees. Mitesh, what would you recommend?
See, I think the stock kind of peaked out around those levels of 210 and since then has been corrective. I think it's coming down now to levels where the longer term buying should be, somewhere considered. I think anything close to about 150, 140 would be excellent levels to get into this. So if you can average it out, I think my advice would be to possibly average it out on another 10 to 12 point kind of dip from here and keep a stop loss below 140. I think eventually the stock, after this time-wise and price-wise correction plays out, should start getting into an uptrend again and at least if not cross, at least retest those highs of 200.
All right, let's move on to the third headline of the day. IDBI and Federal Bank have put fresh concerns and conditions on the stake sale of IDBI Federal Life, which is the life insurance business, as a joint venture between three partners. They've sought a premium from the bidders on account of the new conditions put forth by AB Sun Life and Max Sun Life. Remember, both those parties want an exclusive bank assurance tie-up, which means that these bank branches should be selling their insurance, the buyer's insurance products, for a period of almost 10 years now. The sellers are saying, pay us more if you want it. Yash Jain is here with the details. Yash, so who's really now left in this game? Because we spoke with Analjit Singh earlier in the day as well.
Well, Prashant, it has to be considered the most crucial development in the IDBI Federal Life Insurance deal. The latest that we're given to understand is that the sellers of the company, that is IDBI Bank and Federal Bank, have put fresh conditions for this particular stake sale. And the fresh condition has to do with seeking a premium over the bid amount of 6,000 crore, which came in from two potential buyers in the form of Max Life as well as Aditya Birla Sun Life. Now, this fresh condition of seeking a premium is essentially in order to accommodate some of the conditions which have been put forth by the potential buyers on the bank assurance front. Before we move forward, let's just understand what are these conditions. As far as Aditya Birla Sun Life is concerned, they have sought a 10-year bank assurance time period as far as distribution of their products is concerned. The second condition is exclusivity of this bank assurance tie-up, irrespective of whether IDBI Bank gets subjected to any sort of merger or a privatization going forward from the government. Here we are given to understand that Aditya Birla Sun Life has also proposed that they are willing to pay this premium over the bid amount, but yes, they will be paying it every year, depending on the business which the bank assurance partnership gives to them. At the moment, for the deal to go through, they are willing to issue convertible debentures, which can be converted every year depending on the business which they get.
Mayuresh Joshi and Mitesh Thakkar are with us to answer all of your questions. Well, let's get to the fourth headline for today. Premji Invest has picked up a 6% stake in Future Retail. The investment arm of Wipro chairman has bought 3 crore shares at 560 rupees a piece. Remember, Premji Invest is already an investor in one of the group entities, Future Lifestyle Fashions. Meanwhile, in an exclusive conversation with CNBC TV18, Future Group CEO Kishore Bayani said that the company will get 575 crores via a clawback clause. Listen in.
Bharti family, Mittal family-owned entity, which held around 9.3% in Future Retail. They have sold 6% of stake to Premji Invest. Okay. And Premji Invest is one of the larger investors in the consumer space in India. They are also investors with us in Future Lifestyle Fashion. And we believe they are long-term investors and will play a good role with us in building up our business to another level.
Okay, so that is Kishore Bayani talking about the transaction which took place, and I mean, as you heard, you know, it's not as if the money gets transacted between investors. The company also gets almost close to 600 crores because of the clawback provision. We got a question now. So we have Sagar Munod, who's asking. He's got 2,000 shares of Future Retail. His purchase price is 605 rupees. He can wait for about 3 months. He wants a price target essentially for Future Retail. Mitesh, what would you tell him? Mayuresh, if you can hear me, the question is on Future Retail. The viewer's got 2,000 shares. His price is 605 rupees. What would you advise? Yeah.
So Prashant, if you can elongate his horizon, I think I remain optimistic and positive on Future Retail, expecting a double-digit SSG growth specifically on Big Bazaar. The overall SSG growth disappointed at 6%, but I think it should start picking up. In the FBP part of their business, as more private labels start coming in, I think the leverage on that part of the business should also grow. Easy Day, again, I think what we've probably seen in terms of membership numbers actually going up. I think it's a very healthy sign in terms of the EBITDA dynamics for Easy Day also improving. And with Hypercity probably coming in, my own expectations are that the EBITDA margins around 4.4%, which were reported, should show significant signs of improvement as asset turns improve and the automatic leverage on the balance sheet happens. With the clawback of 600 odd crores, the elevation of debt also improves the return ratios. So I think hold on to the stock. I think the target price that he's probably looking at can get achieved over the medium term.
Mitesh, would you agree?
I think the only thing is that he might want to expand the time horizon. The stock, after peaking out at 650 in November, has been sideways, and this is good consolidation going on. I think good base building going on. It's doing a range of roughly about 520 to about 630, 640 on the upside. Once it breaks on the upside, I think the first minimum target should be 750, but I think eventually I'm looking at target close to about 900. So give it about a year or so. I think the stock can still give 50% from here after this consolidation plays out.
Okay, so that's on Future Retail. But moving on now from equities, the fifth and the last headline for today. The Met forecasts active to vigorous monsoon conditions along the west coast. Mumbaikars must be ready to spend the weekend indoors as the Weather Bureau has issued an extremely heavy rainfall alert. Warns that the heavy showers are likely to continue till Monday. Manisha Gupta is here with more.
Well, absolutely. Thank you so much for that. It could be a cheer, but not really, especially when you are looking at those warnings of heavy to very heavy rainfalls in Maharashtra and Mumbai as well. That could continue until Monday. Well, the maximum intensity of these rainfalls are expected between Saturday to Monday is what IMD tells us. But the important and the good thing really is that the progress or the advance of monsoon is on course. It actually is a couple of days before target for many of these cities and states as well. So the expectation from the IMD is that we are looking at heavy rain forecast one in coastal Karnataka, Goa, Konkan and Maharashtra. But the advent of monsoon in Maharashtra and Goa would be complete in next 24 hours. The IMD also says that the monsoon will advance into other states like Gujarat, many parts of West Bengal and other areas going forward as well. The only thing that the IMD really says is that between the 1st to 6th June, that is until yesterday, the monsoon until now has been 10% below normal. But these are still early days, and in next 3 to 4 days, with the kind of progress that we are looking for monsoon, this number is also expected to turn into positive.
Manisha, thank you very much. Appreciate you getting us those details. Mayuresh, Midesh, appreciate you joining in on the show today with all the advice on markets and for questions as well. Ekta, I mean, you know, these predictions of very heavy rainfall is actually pretty bad news for anybody who's dependent on getting to work or getting back from work home on Uber and Olas.
Absolutely.
I mean, you know, transport becomes a nightmare.
But I'm sure it'll be good for the equity market. So let's see whether the monsoon is going to continue showering its good wishes on the Nifty as well as the mid-cap index. But on that note, we're going to wrap up this edition of Markets Today Talk Back. Thanks very much for watching.